If it is Friday, if it's 11 in the morning, it is time for another About Mansfield Consumer Advice Series episode. Hello, I'm Steve Casillo, and if you are out and about around town, the question is why? Because I was home earlier and I am now in the studio. It took me about 20 minutes to drive 3 miles because I don't think I did more than 10, maybe 15 miles an hour. Heritage Parkway, I got up to 20 though. I was really excited about that. But stay home if you can because it may look like fluffy snow. There's a tremendous layer of ice out there, and so just be safe. But another person who made the trek to the studio. He is over my left shoulder and is always a pleasure to have here is Phillip Washington Jr. Welcome back to About Mansfield.
Thanks for having me. I was able to fly in on my hovercraft.
There you go. So you missed all the slipping and sliding.
I missed all the slipping and sliding.
And so Phillip is here. He is our resident wealth manager and wealth advisor. Appreciate, again, him being here. Today, we are going to get deep into talking about financial situations, and specifically the insurance against a financial system collapse. And so, Phillip, let's go back historically and talk about what happened in 2008, and is there the possibility that we can prevent what happened in 2008? So what happened in 2008?
Let's go there. The financial system almost died. And let me explain it this way. Americans, we are spoiled in the sense that we tend to think, no way our financial system can collapse, right? That happens in places like Venezuela or Argentina or Zimbabwe or Rome, right? Or France, where it happened multiple times, right? No way it's going to happen to us. It's like anything else in life. Bad things only happen to other people.
Well, the United States has the best economy in the world. Yes.
No. Relative to everything else, yeah, but that's not saying much.
Okay.
That's not saying, and currently, right? Because currently, debatable because China's coming up. But I mean, yes, I'm an American, so yes, America, and I can also say that objectively today, 20 years from now, probably not going to be the case.
All right, so I digress. Back to 2008. What happened, and how can we prevent it today?
So 2008, the system almost collapsed, and so here's basically the simple version of what happened. I'm not going to go into the nerd stuff, but the way a financial system works is you have collateral that is at the base of a financial system. Meaning, a financial system is basically people lending money so that people can put money to work in a productive use, right? And so that's how economies grow because, right, I give you money, you become a more efficient farmer, you produce more food, that feeds more people, right? And then we take those savings and we invest it somewhere else. And so that's an economy, but you have to have collateral that can make the lender feel comfortable, right? So part of it is the income, but part of it is, what's the collateral I can get if you don't pay me back, So we understand that from a home. That's why a lot of companies want 5 to 20% down so they can have a cushion of some collateral. But the base of a financial system, right? The current one, the base is our treasury bills, right? Which are dollars for simple purposes. Let's call them dollars. And so let's go back to the example. So let's say you deposit $1 million with me, right? And I am, you give me $1 million and you say, keep this safe for me and you can lend it out and make some money and we can kind of split the interest. I'm like, cool. If I take your $1 million and I lend out $1 million worth, I can make some money on it.
Yeah.
If I take your $1 million and I lend out $3 million against it, right? Meaning, and people say, well, how can you lend out $3 million? Well, just understand that banks can create money with ledgers on a database, right? So just understand that. But it works if everybody doesn't want their deposit all at one time. Meaning, I can have $1 million and lend out 3 as long as you don't want your $1 million back, right?
Okay, yeah, that makes sense.
And there's a safe ratio, right? But once those numbers get to 15 to 1, 20 to 1, 100 to 1, if there's some sort of bad thing that happens in the economy, and then you come back to me and you say, man, Phillip, something bad happened. I need my money back. I'm like, I can't give it back to you, right? Because I only got $1 million in the bank, right? And or let's use a real number. Let's say I have $1 million and I lend out 20 million against it, and and 5% of my loans that I lend out go bust, right? That wiped out the original $1 million that I had, because the rest of it is just ledgers on paper, promises to pay in the future. So I'm done. I don't have any more capital. I'm finished. I'm wiped out. I'm insolvent. That's what insolvent means.
Right.
In '08, what happened was the finance system couldn't even calculate the number of the ratio of actual treasury bills to money in the system. It was over 100 for sure. It was over 100 to 1, right? But they couldn't calculate how bad it was, and so it wasn't a run on the bank from an individual standpoint, though. So we weren't running to the bank. It was more banks saying, well, man, I don't trust any other banks because we know there's not enough money in the system, and we know it just got wiped out value, and a lot of folks are insolvent, and literally the system almost went bust financially. So that's what happened in '08.
So if every person who had a bank account went to the bank and withdrew all their money, the banks wouldn't be able to handle it.
They literally can't do it. They can't. There's not enough money in the bank to cover all of what they tell us our deposits are in the bank, because it's too over leveraged.
Is there a counterparty risk? And well, actually, let's start with what is a counterparty risk? And
yep. So that is counterparty risk, where you say, I'm gonna let another party hold my money, and because once I give the bank my money, they can go lend it out and leverage it up, and if I come back to it and it's not there, that's a risk, right?
Yeah.
So that is counterparty risk.
So the insurance against a financial system collapse, we're now in 2022. How can consumers protect themselves against a potential financial system collapse?
Now you get into why Bitcoin was created, because think of Bitcoin as solving that big problem, and it would be the equivalent of before Zoom meetings. If we wanted to build a relationship and communicate with somebody that was far away, that was just, we can do it by phone maybe, but we really couldn't do it this way.
Email.
Or you can do an email, but it wouldn't it wouldn't be the same as getting context of facial cues, hand gestures, how they feel. You can get a lot of that through virtual communication. So that technology solved that problem. What Bitcoin solves is the problem of counterparty risk. And so Bitcoin is a monetary network where you can store and transfer value without the banks. So going back to the example, you got $1 million. You no longer have to place it with me, Phillip, because I'm the single point of failure. The Bitcoin network is distributed among, hundreds of thousands or millions of computers around the world, so that the ledger of who owns what, right? Remember I was saying that's basically what the banks do. The ledger of who owns what is not distributed on one computer with one person who can change it or do whatever they want to do. It's distributed across an entire network, and so and those rules around it can't be changed by a small group of people, right? I mean, I'm not gonna go into how it can be changed, but basically, for all intents and purposes, it's not changeable, and so that is the Bitcoin network. So you can comfortably store your value and transfer value on the network without the need for an intermediary, which is eliminating counterparty risk. I guess it would be very similar to, you and I were talking before about the Joe Rogan podcast, and I was explaining to you the people that are trying to cancel him don't understand technology, because A podcast is just the RSS feed, right, on the
Right.
internet. And the internet is a distributed network of computers around the world. So the RSS feed, you know, that's why my podcast and your podcast is on Apple, Audible, Spotify, because the feed pushes it all out there. And so to cancel it, you got to have every platform not post Joe Rogan. And even in that example, people if they really want to, they can just go to the RSS feed, directly.
Rather directly, right.
Yeah, and so that's the same with Bitcoin. It's like you can't cancel it. It's not cancelable because it's not controlled by one entity, and that is why you see so many. That's why you see Russia. We talked about doing Bitcoin mining. That's why you see CEO after CEO switching over once they understand technology. That's why you see the young folks like us that got in technology. We're like, oh yeah, I don't trust the dollar-based system. Too much counterparty risk. I want
Right.
to store my real value in a distributed ledger over hundreds of thousands or millions of computers.
And maybe in a week or two, or maybe in an upcoming episode, we can really just break down what Bitcoin is, because a lot of people my age, of retirement age, are afraid of new things. What is Bitcoin? Well, maybe we can do a Bitcoin 101 session for the people my age and explain to them that it's. I remember this. This is kind of like when eBay came up, and everybody was making fun of eBay. This online auctions. Oh, it'll never work. And yet then, and the same thing with PayPal.
Mm-hmm.
PayPal became, it's got a silly name, and it'll never work. And these are now standard technologies in not everybody's life, but almost everybody's lives. eBay, PayPal,
Amazon,
and Bitcoin is going to become a part of people's lives.
Yeah, no, you're 100% right. So yeah, that'd be a good idea to do an episode on that.
Okay. If people want more information about whether their financial system is going to collapse, or if people have any questions about financial management, whether it's their own or their business accounts, how can they get a hold of you?
Best place to go is StonehillWealthManagement.com. Has all of my contact information, my social media links, and a link to all my podcasts on all the major channels.
Phillip Washington Jr., we'll do it again next week.
All right, appreciate you. Thanks.